Hi, Howard Del Monte with Clarity Wealth Management. Hey, in today's video I wanted to talk to you about interest rates and how they affect your portfolio and the economy. This is a chart that shows the stock market, which is the blue line, housing, which is the purple line, and interest rates, which is the orange line. Now, interest rates are a really important thing because the government uses them to speed up or slow down the economy. So if, for example, they want to slow down the economy, they raise interest rates. So if you look at what they've done the last few years, they might have made rates change everything. So they might have made the interest rates go from very low to very high. And the impact that has is, people used to pay 3% on a mortgage, and today they pay 7%. So the thing is, fewer people can afford to buy a home at 7% versus 3%. And so now the Fed said, we plan to cut rates in the next year. So over the next year, we anticipate that they will cut rates and do as they have said. And so the advantage of that is cheaper mortgage rates, which means that people will be able to buy houses. And if you know any young people, they're going to need to plan to buy a home in the next several months. I think it's a good time to start looking as the rate cuts happen. Usually you find a bottom in housing somewhere around, within 6 months of that time or so. So you get some good growth and things. And why I like it is the rates. So the rates are a great indicator of what's going to happen in the economy anyway. So you can see we started off this chart with very high interest rates, and shortly after you see a correction in the stock market and you see a correction in housing. And then as the Fed went from high rates to low rates, you see the stock market and housing rise up. So it's a good indicator, because trillions of dollars are going to move into the economy. So it has a huge impact in a lot of ways. Because people who go buy houses do things like, maybe they have concrete poured, or they get a new pool, or they just go buy some tools because they got to trim the trees in the backyard. So there's a lot of jobs that are created that wouldn't otherwise be created. And so it's a powerful indicator in the economy. So as the Fed starts to cut rates, we hope that that'll create some growth for you. I don't know if you've been watching your portfolio lately, but we've been doing real well. I parked a little bit of cash on the side. I'd say the average client has maybe 10 to 20% that I parked in a shorter term bond fund that we're going to use for opportunities. That's just one of the things that we do to protect you. And we use it for opportunities too. So the advantage is when we see opportunities, we deploy that cash and we put it to work somewhere. But this is a cool indicator. You're probably not going to hear about it on the news. News is super negative. And we just wanted to give you some good truth. I hope you enjoyed the video. If you have questions, feel free to reach out to us. Thank you so much for your time, and thank you for being our client.